Ever wondered how the world's fastest growing economies are changing the way we think about making money? Today we're diving deep into the massive world of global arbitrage opportunities. For a long time, investors stuck to the safe bets in New York or London, but the real action has shifted toward the dynamic markets of Southeast Asia, Africa, and parts of Latin America. Arbitrage is basically the art of buying low in one place and selling high in another simultaneously, and emerging markets are currently providing the perfect stage for this strategy. These regions are growing at rates that developed nations can only dream of right now, creating massive price gaps across different asset classes and many geographic borders today. Information flow in these areas isn't always perfect yet, which is exactly where the smart money finds its edge by exploiting those little delays in price adjustments across the globe. Think about the massive interest rate differences between a stable economy like Switzerland and a booming one like Brazil, where the potential for a carry trade is absolutely huge now. You borrow money where it is cheap and invest it where the returns are much higher, while keeping a close eye on the currency fluctuations to protect your main capital from any loss. Beyond just currency, we are seeing a huge gap in how technology companies are valued in different parts of the world, leading to some very interesting setup options for new investors. A fintech startup in Jakarta might be doing the exact same thing as one in Silicon Valley, but trading at a fraction of the valuation due to local market perceptions and liquidity. This creates a bridge for investors to move capital into these undervalued gems before the rest of the global market catches on and pushes those prices way back up to normal levels. We are also seeing the rise of commodity arbitrage as supply chains shift from traditional hubs to new manufacturing powerhouses like Vietnam and parts of India or even North Africa. Raw materials are often priced differently based on local logistics and trade agreements, giving savvy traders a chance to profit from these physical discrepancies in the global market. The digital revolution has made it easier than ever for an individual to access these markets through various platforms that were once only for big institutional players in the past. However, you have to remember that with higher potential returns comes a much higher level of risk and volatility that can catch an unprepared investor off their guard very quickly. Political instability and sudden regulatory changes are common themes in emerging markets, so you always need to have a solid exit strategy and risk management plan for your money. One of the coolest new areas is crypto arbitrage, where price differences on regional exchanges can be significant due to local demand and liquidity constraints in specific nations. Traders use automated bots to spot these gaps and execute trades in milliseconds, capturing small profits that add up to significant gains over a single trading day in this sector. Institutional investors are also moving in with massive amounts of capital, which is actually helping to mature these markets and make them more stable over time for everyone involved. This influx of professional money means the windows for arbitrage are getting smaller, so you have to be faster and more informed than ever before to succeed in this competitive space. Understanding the local culture and consumer behavior is just as important as looking at the financial charts when you are dealing with these types of investments and opportunities. For example, the way people use mobile payments in Kenya is completely different from how they use them in Europe, which affects the growth of the whole local economy and its sectors. By paying attention to these social trends, you can spot arbitrage opportunities in consumer stocks before they show up on the radar of mainstream financial analysts or news outlets. Real estate is another huge sector where price gaps exist between growing urban hubs in developing nations and the stagnant markets of the older developed world at this current time. You can find luxury properties in emerging cities that offer rental yields much higher than what you would get in a place like New York City or even Los Angeles in the United States. Of course, you have to deal with different legal systems and property rights, which is why doing your homework and having local partners is absolutely essential for long-term success here. The world is becoming more connected, but the friction between different economic zones still creates these profitable pockets for those willing to look closely at the data available. As we move further into this decade, the ability to navigate these cross-border complexities will be the most valuable skill for any global-minded modern investor in today's world. You should keep a close eye on the bond markets too, because the yield spreads between emerging and developed nations are telling a very interesting story right now for all of us. When global central banks change their policies, the ripple effects through emerging markets create waves of opportunity that can be caught with the right timing and execution speed. It is not just about having the most money anymore, but about having the best data and most flexible mindset to adapt to these rapidly changing global conditions every single day. We are seeing a new era of decentralization where the old rules of finance are being rewritten every single day by these vibrant and ambitious developing economies across the world. If you are looking to diversify your portfolio and find growth that beats the standard benchmarks, these markets are definitely the place where you should be looking for high returns. Make sure to stay updated on geopolitical events, because a single trade deal can open up a whole new corridor for arbitrage that did not even exist a week ago in the global scene. Innovation is happening at a lightning pace, and the gap between the physical and digital worlds is closing, creating even more ways to trade across these borders with great efficiency. The future of finance is global, and those who understand how to leverage these international differences will be the ones leading the way in the coming years of economic evolution. I hope this deep dive gave you some new perspectives on how to look at the world map as a giant broader financial opportunity, and strategic wealth-building ideas for your future. Thanks for watching, and if you found this helpful, please make sure to follow for more insights into the fast-paced world of global markets and smart investing strategies every week. Keep your eyes on the horizon and your capital ready for the next big move, because the world of emerging markets never sleeps, and neither does the opportunity to grow your wealth.